Hello traders, in today's video we're going to be talking about what just happened with Bitcoin and how we can profit from it in the future. Additionally, my Delta Neutral course is out, and if you want to pick that up and learn how to make passive income, you can go do that. With that, let's start the video. Alright traders, so this is highblockcapital.com/graph data, and what happened? Well, we can see that when Bitcoin rose, the top trader positions rose as well, and also the global positions rose as well. And this doesn't really tell me much, but what's most important whenever I diagnose and read sentiment is consolidation and low volatility patterns. Look what happened when price did really not much here after the pump. What did the top traders do, and what did the retail traders do? It was a perfect divergence, really. I mean, you couldn't have gotten a better one. The top traders continued to short, and close longs. And the retail traders, the overall crowd, what they ended up doing was they just continued to buy, closing shorts and entering into long positions. Then this happened, and the price absolutely tanked, as you can see. And then also what's important to look at is what's going on right now. So what I've noticed is that the top traders are actually going down, whereas the retail traders are staying flat / going up. What that's telling me is that there is very likely a large amount of retail traders that are trapped at higher prices. Now, you may be wondering, well, what do you do with that information? The next step that I always like to do, first I want to see what does the retail crowd do versus what do the top traders do. Then I want to see where are traders trapped. And for this, we're going to go to net positions heat map. And we're going to actually find where those long traders are trapped at. So I know there's a lot going on in this picture right here, but remember that yellow means a lot of entering into positions from longs, BitMEX longs, and blue means a large amount of exiting. So something kind of sadistic that you can see here is basically all the longs closed the worst possible prices. They closed mostly from the 93.20s down to 9,000 and lower. A large amount of closing happened at prices where they probably didn't want to close at, right? But some of them did get lucky and closed after a move below consolidation, but others not so much. So let's go look at during consolidation and really all this, where were a lot of longs entering. So for that, I'm actually going to zoom in on this. So what I can see here is yellow. Unfortunately, we had a large amount of longs entering around here, right? You can see that this part was yellow, and then price dumped, as you can see. So I know that a large amount of longs are trapped at around what looks to be 10,140 and lower. But now I want to see within consolidation, where are these traders likely trapped? Now I can see here is likely because Z shows how many million of traders went long there. So this predicts that 2.16 million went long and around here. You can see the Z value, -2, meaning more longs closed there than opened. And I can see that a large amount of traders likely open positions in the mid 95.50s. I mean, in the 95.50s, 95.40s, as you can see here in this consolidation structure. So what I would expect with this information is if price was to go here and climb higher, it would very likely meet resistance and get sold back down. I also know that even going more short term, let's really zoom in here, that we actually had another large amount of traders entering long at around the 94.80s, 94.90s, as you can see around here. So what this means with this information, and instead of it constantly doing that, yeah, perfect. Oops, I'm going to use U. Yeah, so I think I can see a large amount of longs entering there, which tells me that this could actually make price struggle to move higher. The reason I say that is if price does move higher, any traders who had gone long here are now in profitable positions, and they may sell the price right back down. So that is a common pattern that I typically see. Well, I want to also look at, how about short positions? Where are they likely trapped? So it's a similar story of what happened to the short positions where they closed. A lot of them did get to close around here and here. But let's go look at where they predominantly entered in this recent consolidation pattern. So it looks like they entered around where long traders had entered, and that makes sense that we have a lot of shorts and longs entering at around the same price point. a large amount of open interest exchanged and increased there, I can see that there's a large amount of shorts here. So when I see that there's a large amount of longs and a large amount of shorts entering at the same price point, what that means is either price will do one of two things. Price will either, rise, or price will either fall. That's not much of a prediction, but what's more important is what happens after. If price rises a fair amount, any shorts who had entered in this accumulation area are trapped. They're in unprofitable positions, which means that price could come back down and treat this whole area as support. Now, if price goes down and traps a lot of longs who had entered here, as explained from above, then what that means is that if price goes back up, it will likely treat that area as resistance. So that is what I see currently in open interest positions. But overall, to diagnose where most traders are probably trapped, besides the 10,000 levels, it's really around longs around the 9,500s, the mid 9,500s, and also in previous consolidation structure at around 94.80, 94.90s. So what I also like to look at is liquidation levels. So let's go take a look at that. You're about to see a lot of colors. So get ready. Oh, yep, there's the colors. So a lot going on in this picture. Let's zoom in and make it less going on. So I can see here that we had, all these liquidation bubbles really filled. Every single one of them was liquidated. And this could have worked well for more of a magnetization strategy in which you look to take the position that aims itself toward where many liquidations could occur. And you could see here that when price was trading here, there were more people to be liquidated down here than liquidated up here. And if I zoom out, you could probably see that too. So now what we see here is this is where I want to find where potential liquidations can occur. So I know that a potential support, potential resistance would probably be around the 9,600 because that's where some of these shorts are going to get liquidated at. I also know that, this was like a perfect touch of this liquidation level there. I also know that if price comes back down to here, it may wick, it may go like that very, very rapidly, because if price reaches these liquidation areas, it will probably accelerate and liquidate a lot of traders at once. It'll probably liquidate a lot of traders who, A, hadn't been liquidated in the first wave of the sell-off, or B, longs who tried to enter here because they wanted to buy the dip, and then price liquidates them. So I predict that over the next day, we're going to see probably both of these sides liquidated, if anything. I think that potentially we could get a move that either looks like, okay, it's going to be white on white. Okay, no, that is not helpful, Bennett. Black, okay. They changed their settings. This, okay, this is not clear. Okay, this is, yeah. I don't love the update that this app did. This is my handy dandy tool, but they made it strange. Okay, so what we could see is liquidating the shorts than just that, or we could get kind of a stop loss on a wick and then move back up. I think that one of those two scenarios is very likely, and the reason I say that is because of the amount of liquidity in both directions. And something to keep an eye on would be open interest. If you see open interest rapidly increasing in this consolidation phase, that makes it pretty likely that I think a lot of people are about to get liquidated. Now, I'm looking currently at the 20 million. I can also look at the 10 million to see where more traders might get liquidated at. This is going to give us a lot more colors. Oh yeah, a lot more colors indeed. So I can see here that, okay, a lot going on. This is fun stuff. Yeah, there's a lot of potential liquidations to the downside. And to the upside, if price goes any higher, it's going to begin to first liquidate a lot of shorts who had shorted around the bottom here. They're going to get liquidated. And then two, it's also going to reach the point where a bunch of underwater or unprofitable longs had entered. So this area could create potentially some resistance if price goes up. And then maybe price goes up, then back down, potentially. We'll see. But again, when you use this data, you have to constantly keep looking at the data. It's not just one, diagnosis of the market, then you're done. Because my analysis now could change because the data itself could change. So that's something that you do need to remember. All right, I'm going to go look back at the chart. I also want to look at net longs and net shorts. So let's go, yeah, net shorts, net longs. Now there's a lot of indicators on my graph now. Oh, Lord. Oh, actually, no, I don't want net. I want you to go away. Okay, I wanted cumulative. Cumulative longs and shorts BitMEX. Perfect. Yeah, this is what I wanted to see. So yeah, and you can see it here that there were a lot more longs than shorts. There were a lot more aggressive longs entering than shorts, and goodbye to the longs. And it looks like there's still a fair amount of longs. So it seems like a lot of retail traders are trying to buy still, and that thesis of mine is from global going up, showing a lot of buying. And then also we can see that the net is favoring the longs, which means that there's a large amount of longs entering, which means that there could be more overhead resistance if price was to go higher. It could make it harder for price to go up. So that's going to do it for this video. I hope that this was helpful for really showing what just happened with this kind of pump and dump pattern with Bitcoin. I think the best way to take advantage of these moves before they happen is to constantly check the data. And you can use alerts. You can just, watch it. But, if you want to be the one who actually profits from this, then you're going to need to be able to predict these things before they happen. And one final recommendation that I would give is to think of everything as probability. That's how I have been trading a lot more recently. I look at any move as probability. So if something goes against me, that's just part of, what can happen. If I think that there's an 80% chance that price goes down, as I'd say there probably was around here, and price went higher, well, then it does. And, that 20% scenario happens, and that's okay. And that's okay because you're thinking more probabilistically and less emotionally, unless the price has to go down. Here, I would personally say that there's more credence to the fact that price will go down rather than up, just looking at what's going on here. I think if anything, price is going to have more magnetization to the downside, but that's probability. Price could go up, and that could happen too. So that's a way that I think that is important to think is to think of which side does probability favor. And if you want the answer to that question, identify what the herd in the crowd are doing, identify what the top traders are doing, then finally identify where the maximum pain can occur for the herd. What price would cause the most pain? And I personally think right now that to hurt a lot of these traders, price going down to these levels would hurt a lot of them. So that's why I don't think that'd be crazy to happen. With that, that's going to be it for this video. You can go check out this tool. And I'll see you in the next one. Happy trading.